Good evening and thank you for joining us on India Business Hour. I'm Parikshit Luthra and here are the headlines we are tracking at this hour.
2014 के पहले का जो दशक था द लॉस्ट डेकेड के रूप में जाना जाएगा और इस बात को इनकार नहीं कर सकते कि 2030 का जो दशक है ये इंडिया's डेकेड है.
Prime Minister Modi launches a scathing attack on opposition without directly referring to the Adani controversy, says the UPA government's tenure from 2004 to 2014 will be remembered as the lost decade, adds that the opposition is steeped in frustration due to the people's mandate against them. Monetary Policy Committee hikes rates by 25 basis points as expected, but Governor Shaktikanta Das provides no indication of pausing the rate hikes and promises to remain unwavering on taming inflation. RBI also hikes the growth outlook for FY24 to 6.4%. Top bankers say the monetary policy was more hawkish than expected. Uday Kotak does not see interest rates easing anytime soon. Snapshot's Zareen Daruwala says another rate hike cannot be ruled out. Amid the turmoil at the Adani Group, RBI Governor says the resilience of India's banking system is much stronger to be affected by a case like this. RBI adds that exposure of banks is not significant and loans are backed by underlying assets and not market capitalization.
I think, and I see a lot of corporates here, they should be borrowing more from Indian financial institutions. They're borrowing too much from outside. I'm sure my banking colleagues will agree with that.
Uday Kotak asks India Inc. to borrow from domestic financial institutions and not go abroad. Also adds that India needs to build more capacity in underwriting and scale. Large corporates and startups are flourishing in India, but not the middle-level companies, says Uday Kotak. Tata Steel's Narendran argues for scale, but also adds that a large economy needs thriving small and medium enterprises. The government introduces the Competition Amendment Bill with changes which could have massive implications for big tech companies. The bill proposes to levy penalty on global turnover instead of domestic turnover in case of violations. The government plans to move the bill for discussion and passage in this session. TCS expands ties with UK-based Phoenix Group for a deal worth £600 million. This is the tech giant's largest deal. Win this fiscal. TCS, as part of the deal, will digitally transform Phoenix Group's insurance business. At least 12 digital lenders submit their views and documents to the government, seek removal from the ban list. The IT ministry had asked Google and internet service providers to block certain loan apps on the back of allegations that they were communicating to servers located in hostile countries. The death toll in the aftermath of the Turkey and Syria earthquake crosses 11,000. Hundreds of thousands left homeless as rescue operations continue amid freezing conditions. Syria activates the EU Civil Protection Mechanism, requests further assistance. US President Joe Biden delivers his second State of the Union address to Congress, marking the halfway point of his tenure. Biden calls for increasing taxes on the wealthiest Americans in addition to curbing anti-competitive practices, increasing rights for workers and capping insulin costs. Microsoft challenges Google in the search business, integrates ChatGPT with its Bing search engine and Edge browser. CEO Satya Nadella calls AI-powered search the biggest thing for the company since the cloud 15 years ago. That's a CNBC-TV18 exclusive. The top story this evening, Prime Minister Modi launched a scathing attack on the opposition. This came a day after Rahul Gandhi raised questions in the Lok Sabha over the turmoil at the Adani Group. Without directly referring to the allegations, Prime Minister Modi accused the UPA from 2004 to 2014 as one riddled with scams and said it will be remembered as the lost decade. Prime Minister claimed that the people of India will not pay heed to what he called as lies from the opposition. In a speech that lasted nearly 90 minutes, Prime Minister also said that global investors and rating agencies have full confidence in the India story. Let's listen in to what the Prime Minister said and how the opposition reacted.
वन नेशन वन राशन कार्ड, देश भर में कहीं पर भी गरीब से गरीब को भी जब राशन मिल जाता है, वो आपकी झूठी बातों पर, आपके गलत गलीच आरोपों पर कैसे भरोसा करेगा। जिस किसान के खाते में साल में 3 बार पीएम किसान सम्मान निधि के 11 करोड़ किसानों के खाते में पैसा जमा होते हैं, वो आपकी गालियां, आपके झूठे आरोपों पर विश्वास कैसा करेगा। डिफेंस डील को लेकर के हेलीकॉप्टर घोटाले और सत्ता को कंट्रोल करने वाले लोगों के नाम उसमें चिन्हित हो गए। आदरणीय अध्यक्ष जी, जब देश के लिए जरूरत थी और निराशा के मूल में ये चीजें पड़ी हुई है, सब उभर करके आ रहा है। आदरणीय अध्यक्ष जी, इस बात को हिंदुस्तान हर पल याद रखेगा कि 2014 के पहले का जो दशक था, द लॉस्ट डेकेड के रूप में जाना जाएगा, और इस बात को इनकार नहीं कर सकते कि 2030 का जो दशक है, ये इंडिया's डेकेड है।
Meanwhile, Congress President Mallikarjun Kharge attacked the government over its links to the Adani Group. Finance Minister Sitharaman hit back. Take a look at that exchange.
एक मोदी जी साहब के नजदीकी दोस्त की दौलत 2.5 साल में 13 गुना बढ़ गया। 2014 में उसका 50,000 करोड़ रुपए थी, 2019 तक 1 लाख करोड़ रुपए हुई। अचानक ऐसा क्या जादू हो गया कि 2 ही साल में 12 लाख करोड़ रुपए की संपत्ति आ गई।
It's very smart to say we are giving data, we will corroborate it, we will leave it on the table. We are not talking about a member, all this, but it is completely infused with insinuations against the Honorable Prime Minister, and that is what we are objecting to. It's one thing to say it's valuation, don't you understand it? Please, all right, quote the valuation.
RBI Governor Shaktikanta Das also spoke about the turmoil at the Adani Group. He said the resilience of India's banking system is much stronger to be affected by a case like this. RBI Deputy Governor Mahesh Kumar Jain also added that exposure of banks is not significant and loans are backed by underlying assets and not market capitalization.
About the exposure of the banking sector to the, to one particular business conglomerate. We have issued a press release on last Friday. I have nothing more to add to that. So far as the, Indian banking system now, the total, the strength, the size and the resilience of the Indian banking system is now much larger and much stronger to be affected by, an individual incident or a case like this.
Our domestic bank's exposure is against the underlying assets, the operating cash flows and the projects under implementation, and not based on the market cap. The exposure as of now is not very significant across all the banks and the NBFCs as well. The exposure against shares of the domestic banks is insignificant.
And speaking of the Adani Group, the majority of the company's group stocks managed to stay in the green for the third consecutive day. Adani Enterprises' share price has doubled in the last 3 days. However, the current market price is only half of its 52-week highs. The Adani Group's market cap has been more than cut in half after the Hindenburg report raised several red flags. At its peak, the market cap was closer to 25 lakh crore rupees. Today, the market cap was just over 10 lakh crore rupees. Two of Adani Group stocks reported their third quarter earnings today. Adani Power reported a mixed bag with net profit and margins significantly slipping on an annual basis. But revenue rose nearly 45%. Adani Wilmar posted a good set of numbers with revenue, net profit and margins performing well on a year-on-year basis. Profit growth was more than 16% and margins expanded by 40 basis points. Lucy Baldwin, the global head of market research at Citi, said that the Adani controversy does not define India or the India growth story.
Although I can't comment on the specifics around the Adani companies, I think it's very clear that Adani is not India and it is not the India opportunity. Of course, for all growth markets at this phase of the journey, any issues that look like this will always be treated with questions from investors around resilience, around, clearly governance and clearly that political stability.
The Monetary Policy Committee has hiked its benchmark repo rate by 25 basis points. This is the first rate hike of 2023 and the sixth since May 2022. 4 out of 6 MPC members voted in favour of the hike. The repo rate now stands at 6.5%, the highest since 2018. The MPC decided to remain focused on withdrawal of accommodation as inflation still remains in a sticky zone. The RBI has projected a GDP growth of 6.4% in FY24 as economic activity in India remains resilient. The projection is slightly lower than the 6.5% median rate suggested by the economic survey. The central bank expects the first quarter to see a growth of 7.8%. Meanwhile, inflation has been pegged at 5.3% in FY24. Governor Shaktikanta Das said further monetary policy action is warranted to keep inflation expectations anchored. However, he refrained from giving forward guidance in the current tightening cycle, citing that it could become counterproductive.
Core inflation, however, remains sticky. Looking ahead, while inflation is expected to moderate in 2023-24, it is likely to roll above the 4% target. The outlook is clouded by continuing uncertainties from geopolitical tensions, global financial market volatility, rising non-oil commodity prices and volatile crude oil prices. The MPC was of the view that further calibrated monetary policy action is warranted to keep inflation expectations anchored, break the persistence of core inflation and thereby strengthen the medium-term growth prospects.
Well, the rate hike was on expected lines, but what was least expected was that the Reserve Bank will not give any guidance about the future. In fact, many believed that they would, through their stance or in some other fashion, indicate that this is the last of the rate hikes. We got no such indication. In fact, Reserve Bank resolutely saying that it refuses to guide on whether this is the last hike, will there be more hikes, will they change their stance? Nothing. Maybe a wise thing to do when there's so much uncertainty. The second surprising part is that inflation numbers forecast for next year perhaps are slightly more than what the street expected, which is a bit of a comfort because when the actual numbers come out lower, people will be happier. But 5% for the first quarter, April, May, June, is not the average on the street. It's 4 point something, maybe 4.8 or 4.7. So the Reserve Bank has left itself some elbow room on inflation forecast. Growth is the big surprise. Forecasting 6.4% for FY24 is clearly an outlier number. The average I got on the street was 5.8 to 6%, with several marquee economists expecting even below 5.8% in terms of growth. So maybe the RBI knows something we don't, or it's just being optimistic. The splendor of this policy is the non-monetary policy announcements. There were several of them. The TREDS exchange, where small companies can discount their bills a little easily, has been embellished a little, may or may not work. The penal interest rates banks charge is now going to be moderated. There is a lot of announcement on green deposits and green bonds, which will come. The foreigners coming into India can also use their phones to pay over UPI. And the most important thing, insurance companies can use their bonds for lending and borrowing on the CCIL. This may mean a more deeper GSEC market. So non-policy announcements, it makes it a many-splendored policy.
All right. Thank you very much, Lata Venkatesh, for joining us. Now, India's top bankers say the rate hike was expected, but also added that the policy was little more than hawkish than what was expected by the street.
Policy was on expected lines, but probably the feeling was that it was a little more hawkish than what the market would have expected. And it follows the Fed chair's interview last night, which again was perceived a little more hawkish than what the market expected.
I think we had all expected that 25 basis point increase will be there. It was already factored by the market. Apart from that, securities, borrowing and lending, more so for the mutual funds and the insurance company, will make this particular market more deeper, which was the need of the hour. And I would say that, yes, as far as the penal interests are concerned, there will be more order in the industry. So I think these are some of the positives which probably will lead the industry and the economy to the much mature stage.
And here's how the markets responded to the monetary policy. Nifty and Sensex closed with gains of over 0.5%. Mid-caps rallied the most, closing to 1% higher. Financials closed in the green after losing early gains through the trading session. The Nifty Bank Index closed with minor gains. Speaking about the currency market, the Indian rupee marginally strengthened against the dollar. Rupee closed at 82.4 versus 82.7 yesterday. TCS stock gained in trade after securing its largest deal for the current fiscal. The IT giant expanded its long-standing partnership with the UK-based Phoenix Group with a £600 million deal. The deal will involve the firms collaborating on digitally transforming insurance company taken over by Phoenix Group in 2020. Indian corporates need to borrow more from Indian institutions and not from foreign banks. That's the word coming in from veteran banker Uday Kotak. Speaking at CNBC-TV18's IBLA jury event, he said the risks of global borrowing is that foreign lenders may not understand the Indian dynamics as good as domestic lenders, and hence decisions can be taken superficially without going necessarily into the facts of the case.
I think, and I see a lot of corporates here, they should be borrowing more from Indian financial institutions. They're borrowing too much from outside. I'm sure my banking colleagues will agree with us.
Mr. Khara, you want to come in on that as well?
No, I think market is probably guiding them to borrow more from the Indian market. No, global markets
and
are.
I believe that, and I'm not going into any specifics. I think this is a time for Indian financial sector to build its capacity, both in terms of underwriting skills as well as scale. And I do not believe global financials necessarily have better underwriting skills, but India has to hone it, and its own financial sector should be able to do thorough diligence and get its underwriting right. If we do that, and we need to build a whole host of capacities in India so that corporates feel that the first port of call is to borrow from India. And the risks of global borrowing is that a person sitting in New York, London, Zurich, Hong Kong, Beijing, wherever, may not understand the Indian dynamics as well and is very much focused and impacted by media reports globally. And decisions can be taken more superficially without going necessarily into the facts of the case.
And Uday Kotak also said that large corporates and startups are flourishing in India, but not the middle-level companies, saying that India needs to fix the missing middle for scale on a sustainable basis.
There's a lot of activity at the startup level, at the really small early stage, and there is pretty good investment by the big guys. I think what India has to focus is the middle corporates who have to be a core part of the building of India. And it is there, I think, we really need to focus. India must fix the missing middle for scale on a sustainable basis.
We also need to look at industries which have to compete globally, need global scale. There's a Chinese steel company which produces more steel than all of India put together. Right? Bao Steel is bigger than the steel industry of India. So if you have to compete with global players, you need scale. So you need the big guys to also scale up, because India should be competitive, Indian industry should be competitive. So I think we need to, I agree with Uday that we need to build that capability. The big companies also need to play a role there, because a lot of them are part of the supply chain of the big companies. So there's a lot of work that we need to do.
We are really at an inflection point. Having said that, we shouldn't underestimate our other countries who are really also wooing a lot of the FDI. like Vietnam, Thailand, Indonesia, which are also becoming, and the whole ASEAN bloc is becoming quite a big beneficiary of the China Plus One. Having said that, I think our PLI scheme has been really, and the low corporate tax rate has been really attracting foreign direct investment in a meaningful way.
All right, we're going to take a short break here on CNBC-TV18, but coming up, at least 12 digital lenders submit their views and documents to the government, seek removal from the ban list. Details when we're back. Welcome back. You're watching India Business Hour. The government held a review meeting with fintech companies who are on the ban list, giving them an opportunity to present their cases. Industry sources have told CNBC-TV18 that at least 12 fintechs met with the IT ministry for a review on the ban list. They were asked to share information on shareholding, investors, grievance redressal mechanisms, among other things. Government assured lenders that no unjustified action would be taken. Ritu Singh joins us now with the details. Ritu, you have been tracking this very closely. Any kind of reassurance coming from the Ministry of Electronics and IT for these companies which have been banned?
Well, we've been given to understand that an inter-ministerial committee comprising of government officials from the Ministry of Electronics and IT as well as the Ministry of Home Affairs today held a review meeting with several fintechs that found themselves on this ban list circulated by MIT earlier. Now, we've been given to understand that these fintech lenders presented their cases to the government and submitted supporting documents to seek a removal from this ban list. And this information, which was sought by the ministry as well earlier, includes information on their registration certificates, the details of their data storage policy, investors, the shareholding patterns of the companies, grievance redressal mechanisms, as well as the latest security audit reports from these lenders were sought. Now, the reason why they were put on this ban list in the first place, according to MIT's own explanation, in a note that we have accessed exclusively, says that there was a request from the Ministry of Home Affairs to ban these apps after it was found that these apps and websites were functioning in a non-transparent manner. There were allegations of collecting exorbitant interest rates from customers, from threatening, harassing and using unauthorized personal information of these customers as well, including other allegations like these apps communicating with servers that were located in hostile countries, which is why the Ministry of Electronics and IT issued interim blocking directions under Section 69A of the Income Tax Act. This matter was also referred to by the Reserve Bank of India in today's policy press conference, where they said they submitted a list of regulated entities to the Ministry of Home Affairs, and after reviewing that list, these orders were issued by the government.
All right. Thank you very much, Ritu Singh, for joining us. Moving on, the government introduced the Competition Amendment Bill with changes which could have massive implications for big tech companies. The bill proposes to levy penalty on global turnover instead of domestic turnover in case of violations. The government plans to move the bill for discussion and passage in this session. And according to this bill that has been introduced in the Lok Sabha, the time limit for deciding on an M&A will come down from 210 days in the present law to 150 days. Also, the prima facie view of the CCI will now have to be given in 30 days as opposed to 20 days that was proposed in the original law. So let's see what happens on the floor of the House. And before we wrap, the competition regulator in the United Kingdom has raised concerns over the proposed $69 billion acquisition of video game developer Activision by Microsoft. The regulator said the deal could harm gamers in the UK. The proposed acquisition is the largest tech acquisition in more than 2 decades. The deal is also facing scrutiny in the US and European Union. With that, it's a wrap on this edition of India Business Hour. Thank you for watching. News continues right here on CNBC TV18.